right. Hello, everybody. Welcome. This is Tom Randall from GoldenCare. I want to welcome you today to this Integrity Short-Term Care Initiative webinar. Today, we're doing a product training on a product we're all pretty excited about. We've been breaking sales records across the board with this product since it's released. It's relatively new, and it's been a strong show up in the short-term care market. And we'll talk today about some of the reasons why that's the case. I'm joined today by my partner in crime, Dennis Reiner, as always. And again, I've been my 27th year here at GoldenCare, and I've had the pleasure of working with Dennis at some level or the other, and quite a bit these obviously last several years, because we've been really hitting this new short-term care market hard and doing a lot of PowerPoint designing and a lot of webinars, as you probably heard. So Dennis, go ahead and give a shout out and say hello, and we'll get rolling.
Good morning. Thanks everyone for joining us. Excited to share this information on the OmniFlex product.
You bet. Heading into the weekend, we're finishing on one of the things that obviously we know really well, and sometimes these product webinars aren't the most exciting things out there. So we know we kind of enjoy doing some of the sales and conceptual webinars more than doing just product. But I tell you what, this one is a good one. And if you've been on the website, that will show you again, and I see a lot of names that I recognize, maybe a couple new ones, but I do want to make sure you know that we have all the tools you ever will need, and we'll show you that website before we let you go again. And make sure you check out some of our previous webinars where we talk a lot about what you see on your screen, why it's so important that we're out there helping these Americans. And it's a really important part about why we're doing this initiative, because of this perfect storm that's brewing here up through the year 2030, when those baby boomers are aging, and we're really going to have some good solutions for them. So it all really starts here. A lot of times we'll start this with the shifting market, how we were in long-term care, and we'd sold literally $1 billion worth of long-term care over the years. So we really were in that market up to our necks. And as the market itself changed, we still love long-term care, but we know that it's just not a great solution for a lot of people out there. So we have to have more of these short-term care products and home health care only products. And if you've been on any of our webinars, you know we talk a lot about extended care, using that term when we talk to consumers, because we don't want them to think that these plans can't pack a punch like they can, and they can do a tremendous job of helping them out at claim time. So Dennis, I'll let you turn it over to you, and you can go through some of these intros, and we bounce back and forth. We're in different states, folks, so hopefully you'll be able to sit back and learn some things this morning. Dennis?
Great, thanks, Tom. You know, we started this with a soft launch with 13 states, and now we've added more. We'll show you state availability here shortly, but some great testimonials have come from individuals that were involved early on, who were mainly in the LTC arena, is who we were bringing the product to initially. And so you can, maybe I'll just pause for a quick second. You can just take a quick look at some of what they're saying. And we've had a fair number of individuals, I'd say more than a fair number, that actually are starting to write with frequency. And whether that is what you'll be doing, or whether or not you're just going to write whenever it has a fit, and you'll see just how innovative and why there's been such rave reviews about this product. And you know, the cost of care, when Tom and I started way back in the day, you know, I remember nursing home costs being like, it's $3,000 a month, $36,000 a year. And now look, today you fast forward, and it's scary, because most of those costs that are going up today are really not necessarily the brick and mortar cost. And we know that most folks want to age in place and stay at home as long as they can, but it really is the labor cost, and it's driving it up from a semi-private room to a private room. And you can just begin to see why this is such an important solution, because it doesn't really matter what someone's nest egg is. They've worked hard for it, and maybe they've got legacy plans of that they'd like to see materialize, and all of that kind of gets evaporates if they have to actually reach into their own pocket and don't have a solution to actually shift some of that responsibility. So the great thing about when we worked with the folks, and as Tom has said on previous webinars, this has been 3 years in the making as far as to get this product to the market. And we started with, as I said, with just a soft launch. But what makes it attractive is that we're throwing the net a lot wider than traditional long-term care that normally has an upper age of around 79 or so. So the fact that we can go all the way up to age 89 and all the way down to age 45, and you'll see today, Tom's going to walk us through this two-tier underwriting, how simplified it is, some of the usual things about 30-day free look. You'll see some innovation that we put into this that no other short-term care product has. And of course, these products are all guaranteed renewable. And we're just talking today. We have a variety of different presentations, but we're working off of actually Manhattan's official deck, just because in doing this initiative, we want to make sure that we're using the carrier's own materials, even though there's a lot of other tools and resources that we have that we've developed. So we're just kind of following this path, and you'll get a copy of this this PowerPoint. It'll be sent to the marketer that invites you on this call, and you'll be able to review it. But Tom, if you want me to keep on going down this road.
No, I can go for a little bit here. And again, that's one of the things about the product knowledge. There's some of this stuff that's about as exciting as watching paint dry, right? When you're looking at just some of the basics of the things. But we do want to make sure you know it. There's a one-time application fee, and that is per applicant. So if mom and dad apply together, it's on one application, both on the digital app and on the hard copy app. But there is a one-time, unlike some of the carriers that have with the home health care only and stuff, or an ongoing application, or they call that a policy fee. This is just an app fee, one times, and it is commissionable. Rates and all that, we have a separate training on how to do the e-apps, and we'll talk a little bit about the paper app today and the two-tiered underwriting like Dennis alluded to. There is nice, we know we work with a lot of spouses out there or married couples, so we do have a 10% discount with Manhattan Life. And that discount is if both spouses apply and get an application. One of the nice things you'll see about it, we can't go too deep into it on this webinar, but you're going to see that the reason this plan took a long time to put into place is that we have a two-tiered underwriting system that we worked out with Manhattan Life. And the two-tiered underwriting system is not it makes it sound complicated, but I'll show you in the application. It's just a way to throw the net wider and offer coverage on a comprehensive basis for facility and home care to both have the ability for those who are a little bit less healthy and for those who are more healthy. And you'll see that as we go through the application as well. So if I get into the base plan highlights, and again, I'll throw her back, and Dennis knows enough how to yip at me, so I shut my mouth for a second so he can throw in if he ever feels like he needs to as well. But in a nutshell, the full plan, the full benefit plan, starts out with a base plan that's a facility plan, and that has from $50 to $400 per day for the facility. When we get into the underwriting side of it, when I show you those two tiers real briefly this morning, there is a limited plan that says, hey, if you're less healthy, we can still give you something, and it's $100 maximum per day, which is still $3,000 a month for a facility. So it's not anything just to balk at, but it is limited compared to the $400 potentially with the full-blown plan. Makes sense? So the elimination periods, nice selection here. Again, I don't want to show my weaknesses, but I was a little bit surprised. We have a lot of people early on who wrote this plan, and they were real long-term care specialists who did a lot of long-term care. And you can see old habits die hard. There was a lot of 90-day eliminations, more so than I expected. And I think Dennis was the same way. We were kind of thinking that with short-term care plans, almost every example we've ever given, we say maybe do a 20-day facility or a first-day facility as well. But again, you can save premium dollars, and we're seeing agents are doing that. They're telling people, even though these are indemnity benefits and they'll pay regardless of where else you get paid. That's one of the strengths of these plans, that they still are selling a 90-day elimination, saving premium dollars for them, saying most of the time we can get Medicare or somebody to pay for 90 days of acute care. So Again, we're not telling you never to sell it, but I do know that it surprised me that there was a bigger percentage selling 90 days than I thought. Most of the plans are 20 or 0 days, but there are some people selling the 90. The 60 kind of gets left in the wayside. But again, that's something we can look at when we get into doing some more analysis on actual quoting. Benefit periods, we do have a lot of flexibility with these plans, 90, 180, 270, or 360. Most of the plans we sell are 360. But again, there are times, and when you get into our plan design webinars, we talk about sometimes it's nice to have just a little 90 or 180-day plan to complement some existing coverage they might have, maybe to make up for some elimination periods they have with an old long-term care policy or something that they have on the books. So lots of reasons to use different ones. Again, the power of these plans, we called this plan Manhattan Life OmniFlex, and it's aptly named, right? Because it's very flexible and it has the ability to offer up to $1 million worth of coverage at the top end. Or on the flip side, it can go out there and offer a little bit lower plans that are really, really very affordable for anybody you're going to come across. Okay. Lifetime maximums 2 times, and we'll get into that when we talk about restoration. And then there is a bed reservation built right in. And then right on the brochures and on your quotes that you give out, everything that we do here shows off some of the things that make this really a nice, unique plan for the short-term care market out there. One of them is this prescription drug benefit. This is immediately available after the effective date. The average 65-year-old is on about 27 refills or new medications that they're prescribed every year. That seems like a lot, but remember, I'm on 3 meds and I get them filled every quarter. There's 12 of them right there for a younger person. So you can see that it adds up. And the key with this is you don't have to be on claim. Right away, you can have a reimbursement. $10 for any generic drug that you have refilled or prescribed for you as a new drug. Same thing with the brand name, $25 for brand name. And again, year in, year out, $300 maximum that you can get back. A lot of your folks that you're working with in your wheelhouse, especially if you're selling Medicare or some of the products to 65 or 65 or plus, you're going to see they're going to use that whole $300. They're going to get that back. So it's almost a net premium savings, and it can be really strong in your sales presentation to tell people, hey, the premium for this policy I'm designing for you is this, but remember, we're going to get $300 off or $25 off a month. That's a really nice way to lower that net premium that your clients will realize because of that. So Fast 50, again, I'm spending more time on this slide because this is the overall strength of this plan. There's a lot of it right here. And the next one is the Fast 50. The Fast 50 is something, when we helped design the Mutual of Omaha plan for the long-term care, it was one of the things that brought that from number 10 in the industry to number 1 was that flexible cash benefit that we offered as an option in the long-term care plans. So we really felt it was necessary to offer that in this, and it really separates OmniFlex from some of the other offerings out there. And basically what it says is, we meet a lot of people who don't want strangers in the house if they can help it, right? They want to have help from spouses, family members, friends, church groups, whatever it might be. So that's where the Fast 50 comes in. It says, hey, you know what? Regardless of what elimination period you have, you get first day coverage with the Fast 50 option. And whatever your daily benefit is at that given point in time, it would pay 50% of that, and you can use it for pretty much anything you want. And most of the times, again, it's going to be your kids or your spouse helping you out, saying, you know what, we don't need that extreme help yet. We can get by with family and friends. And it's huge because most of these plans, as you know, have a frontline exclusion saying we're not paying for any help from people who live with you, a spouse or family members who live with you. So it's nice to have this option. It's something that Dennis and I could vouch for you and preach to you that with long-term care, we have 70% of the claims start with cash, and 70% of those folks stayed on cash. So people love the flexibility of cash. Probably won't be quite that high with this because of the 50%. But I tell you what, it's still a really nice option for people. And as a matter of fact, we had our first claim with OmniFlex come out a month or 2 ago, even though this is a really new product. And what did they do? They went with the Fast 50, even though it was at 50% of the level they could have attained otherwise. So Dennis, I don't know if you want to add anything to that or need to, just feel free to jump if you need to.
Well, I think, Tom, the important thing is that we didn't want this to be there have been some other products in the market. And of course, if you're just basically cloning anything else that's on the market, it doesn't really set you apart from the competition. And so that's what these benefits that Tom is highlighting, the prescription drug benefit. It's a great, what I call premium justifier, to help mitigate that premium and get people, leaning in, knowing that they can get that reimbursement even if they're not on claim. And the Fast 50, as Tom has alluded to, we already know, we have a history of knowing that how strong that is. And again, whether or not people utilize it or don't utilize it, the fact is that it helps you as the agent to overcome other objections that may exist in that home, such as my wife will take care of me, or my spouse will take care of me, or my son or daughter, whoever it might be. And so this is one of the ways that you can kind of get on the same side of the aisle with your customer and say, well, that's why we have this provision, this Fast 50. So it's more than just having the benefit. There's also a certain psychology as to why we've put those benefits in that helps you to create more sales opportunities and to get people over the hump of making that buying decision.
You're right. Yeah. Thanks, Dennis. And one of the things that I just want to make sure you guys know is that the base plan is a facility plan and there's a home healthcare rider. And built-in benefits is where you see Fast 50. So a lot of you might be going, well, why would you use Fast 50 in a facility? And you're right. Most of the time that wouldn't be the case. But the Fast 50 is just in the built-in benefits area. So if you have a home healthcare rider, which almost every single policy we sell includes, because that's why people buy these plans, is to stay out of the facility if they can. So the Fast 50, of course, is still on the home healthcare rider as well. So that's where it would come into to be used more often, of course. Okay. And it says right on here, facility or home care. Okay. Restoration, remember up here, I said the 2 times benefit max. That's where restoration comes in. And if anybody's on this call who might be in the long-term care trenches or a long-term care specialist, I always say, take that hat off or turn it to the side at least, because this is short-term care. This isn't long-term care. And I want to make sure you realize restoration is a big deal in short-term care, okay? Because of the fact that the way the triggers work in these policies, you don't have to have a doctor certify that you're going to need help for at least 90 days. With these policies, the triggers are cognitive impairment, or you need help with activities of daily living like bathing and dressing, etc. You just need help with them for any period of time and you can go on claim, okay? So basically, in a nutshell, there's a huge list that you could use, but maybe like a hip replacement, knee replacement, a surgery recovery, a fall or a fracture or something that when you're a little bit older, that might say, hey, boy, I definitely need help dressing now, or bathing, but I'm not going to need it for 90 days. I'm just going to need it for 20 days or 30 days or 50 days. So that's why restoration is so important, because what it says is you can use some days of your policy. Let's say you used a 360-day benefit that I sold you, and think of home care or facility in this example. If I use up those facility or home care days, and let's say I use 30 of them up to recover from something, or 35 days, then I'm feeling better, right? And I'm out golfing again or whatever I do, and I'm feeling good. As long as you don't need any help with activities of daily living for 180 days, then the clock starts ticking as soon as you're off claim, and 180 days later, it'll spit you right back up to what you started with as far as your benefit period that was sold to you at the time. Does that make sense? So if I use those 35 days, it'd pop me right back to 360. And what does that do? It gives you more bang for your buck in your policy. It's built-in benefit, and it can keep restoring with this plan. It keeps restoring multiple times if it needs to until you use up 360 days, 2 times that amount, for example, 720 days. So you can really have a robust plan. Not everybody's going to use up all of those 2 times benefit, but I'll tell you what, almost everybody in my mind, a lot of people are going to use up maybe several extra days of restoration, maybe where they'll use up 50 or 100 extra days because of that restoration, because it does happen with short-term care plans. And it's so nice because you can have those little claims and you can feel good about using your benefits for little claims, knowing that it's going to spit the days back in there so that if you do have a more catastrophic illness or accident, then you're going to have the ability to have your plan there with that full 360 days, for example. So we really like that benefit a lot with these plans. Okay. And again, Dennis, jump in if I'm missing anything. This is the deck right from Manhattan, you guys. And I don't like when you do lists like this, but they use the list because it looks like it's kind of limiting. And I just want you to know this isn't an exhaustive list on the home care rider. It's basically showing you some examples of different things it will pay for. But one of the things that we really stressed with Manhattan Life when we helped design this plan is we wanted to say, if you're going to pay premiums for this policy, if you go on claim, we want to throw the net as wide as possible on what it'll pay for. So you're going to see non-medical homemaker services, things like visiting angels, even some of those facility type places or organizations that don't provide health care, but they come in and they provide home care where it's not necessarily health related. And that's a huge plus. It's one of those things that there's no surprises at claim time with a really comprehensive plan like this one. And with the home care benefit, it'll pay from $50 to $300 for the full benefit plan. If you get the limited benefit plan, which I'll show you in a second, is $100 max. And then the elimination periods are flexible, the benefit periods are flexible, and then we have that restoration 2 times max in there as well. And the nice part about these plans are, number one, home healthcare costs are rising rampantly. If you follow it at all, you know they can be expensive for having occupational therapy or speech pathologies come in to the house and help you out, physical therapy as well, for example. But even on the home healthcare aids that are the least expensive benefits you might have, or one of the lower expenditures, the thing that's nice to remember about these policies is they're indemnity benefits, right? So in this example, if I had a home health aide come in, they might come in just for a couple hours and only cost me $100. I mean, in this example, $169 per day. That's probably for 3 to 5 hours of a home health aide. Okay. If that happened and you had a $300 benefit built up by that point in time, it would pay you the full $300, even if your out-of-pocket expenses for that day would have been only $169. So that's the power of indemnity. Remember, regardless of any other insurance or anybody else paying for you, you still get benefits if you go on claim. And regardless of the actual costs, it'll pay whatever you built up to for a daily benefit. Dennis, anything you need to add on that one?
Yeah, Tom, I was just going to jump in and just, talk about, even though we're not talking today about plan design and what people are actually purchasing, but when Tom's talking about that 50 to 300, we're seeing on average about $200 a day for a benefit selected on home care. And back on the facility side, it was just shy of a little under 300. So people are actually buying, plans, all over, but we're seeing some good utilization from an average standpoint. And to Tom's point earlier about on the facility side, on the elimination period, we saw a little bit of a surprise there too on the home care, where it was a little under 20% in the sample list that we saw of policies that had been sold were actually choosing a 90-day. So back to Tom's point about the idea of thinking that Medicare was going to pick up or other coverage that the client may have. In most cases, we try to promote the 0-day because of first dollar coverage. But back to that fast 50, some of our LTC people have figured out that they can shave a little premium, and that's probably why they had chosen the 90. But once again, the most popular benefit period is that 360, and as Tom said, the great thing about indemnity is that you can get that difference of whatever those services you're getting if you had actually chosen that 300. And that's why we see a lot of folks try to max out that home care, because that's where they want to be. That's the emphasis.
Yeah, absolutely. And I think I'm looking at my notes. We just flew down to meet with the folks in Manhattan. It was actually $238 was the average for home care. So people are using close and pushing the envelope on that $300, like you said. So again, the nice part about it is to remember, especially again, if you're a long-term care salesperson out there, tilt that hat to the side, because these are indemnity benefits. They're not reimbursement. like you might be used to with most of your long-term care plans. So also, finally, the last part that we like about the Manhattan Life OmniFlex plan is that we know these are long-tail products, right? So this is a graph right out of the brochure, and it's a graph that you'll see on the illustrations as well online. And there's a couple different things I want to show you about this, and I'm going to spend a minute to make sure you understand it as agents, because there's a couple things we want you to see. The first is that you can have the inflation option, and it's a simple inflation 2 times max. And that is available for you if you get the full-blown plan. If you have a limited plan, they don't allow the inflation. Okay. But what I want to show you here is this little ramp up. This is one of the things. It's certainly not a secret. And Dennis and I call it our secret sauce of the OmniFlex plan, because it really is what makes this plan strong as can be and very, very competitive against any of the other marketing comprehensive short-term care plans out there if you go on claim in about the 3rd year plus. Okay. And what we're trying to do there when we put this together is we realize there is adverse selection with these type of plans. When you get home health care only plans or short-term care plans where you don't have the deep underwriting like long-term care traditionally had, you will get people who wait too long and they don't plan ahead, and all of a sudden they say, well, I need a plan because I'm going to go on claim next year because I know my body's falling apart on me and I know it's coming. So what we tried to do is say, what if we could design a plan that has the best of all worlds and says, you know what, let's try to avoid some of that adverse selection. And if I get somebody who's going to go on claim in the 1st year and they're really knocking on the door, I might pull a different product out of my portfolio and say, maybe that'll do a better job for you. But most of the people you're going to meet with aren't going to be adverse selecting. They're not going to be people who are going to go on claim in the next year or two. They're going to be people that we teach you in our sales webinars that you start the conversation with everybody. And then you tell them, wow, we got a great plan here that if you plan ahead like we're going to do, this plan is going to perform for you at claim time as well as or better than in the other products out there. And here's why. If I were to sell you today and write an app for $200 in this example, it's showing a $200 base. The home care and the facility work the same way here, okay? So if I did $200 as my benefit I sold you today, if you were to go on claim the very first day right after it was effective, you can see 0 year, the first year, it starts at 50% of whatever I sold you. Okay. Again, it's not nothing, right? $100 per day is still $3,000 a month. So even if you did happen to have an accident and go on claim, it still is performing for you. It's just not as big a risk for the carrier, right? So the first year it's at 50% of whatever you offered, in this example, $100. Then it goes up 20% each year in equal increments till it hits up in that 5th anniversary. And then that year it hits 100%. Okay. And again, I can't stress enough, don't worry if you go into 3rd or 4th year. Tell you what, this plan will still dollar for dollar outperform almost anything else in the market. It's really a strong plan because of this ramp up. That's why we call it our secret sauce. It's the reason we can have a 50% fast 50 benefit. It's the reason we can have all the different things that this policy does so well at claim time. Okay, and we can show you examples, all that on a larger training day to show you against a lot of the competition how well it performs. Okay, so after it ramps up, if you had a limited plan or if you didn't choose the inflation on the more comprehensive plan, it levels off after the 5th year and it pays that same benefit whenever you were to go on claim. If you had the inflation rider, which this screen shows in the dark blue, then in the 5th year, it starts raising up at 5% simple inflation. So it takes 20 years to double. So in the 25th year, it doubles and then it levels off. I wish they would have showed a couple more years on here to show that it levels off. But again, it's really a nice, strong way to keep the inflation pricing down so it levels off. And it keeps it from having problems in the future for rate increases. When we start selling these plans to younger people, there's no runaway inflation. That's why we leveled it off. Okay. So a lot to learn in this little slide here, and it seems really confusing, but all we tell people is, hey, don't hide it from your clients. Tell them it'll lay perfectly out in their policy illustrations, their policy when they get it. It'll show exactly what they get. And again, tell people that's really what makes this whole product tick, and it's why it's so affordable and flexible at the time of claim and at the time of the application. Dennis, anything you need to add to that?
No, Tom, I think you covered it. And I will just say that when we take you over to the site, Tom actually has done a video on the ramp up that's specific that you can actually watch, and that'll give you more of a detailed explanation. Although Tom gave a very good explanation, but I'm saying just a video strictly talking about that ramp up capability.
Absolutely, yeah. It's called the power of the ramp up, and it is something that just the power of the plan itself, and then there's something called the ramp up that gives you an easy way to explain it to your clients as well if you need to. So, Dennis, I'll turn it back over to you because I'm doing a lot of the YAP, and I have the HI rider, and then the map of availability.
Yeah, you bet. Well, the good news is with these products is we try to limit the add-on, what we call riders. And you saw inflation was a rider. Technically, home health care is a rider, although in most cases, I think there was a very few exceptions in the analysis that we just saw, having been with in Manhattan, where someone was selling a facility only. But technically, it is considered to be a rider, and hospital indemnity is another rider. And this was really the genesis of this was behind our Medicare agents who are doing a lot of MA plans, and they have a lot of other choices, certainly to do standalone hospital indemnity plans with some of the leading companies out there. But it may be a convenience factor to have this as a rider, and it's $50 to $300, and it's kind of a scaled down version of the normal hospital indemnity standalone plans that are out there with a 3, 6, or 20-day benefit period, and the maximum is 180 days. Keep in mind when Tom was talking, and he'll share here in a moment or two about that 2-tiered underwriting. If someone doesn't qualify for the full-blown tier 2 planning, they cannot get up to 300. They can get up to 300 if they do qualify, but if they don't and only qualify for the tier 1, then very much the same way that their facility benefit is limited to 100 and the home care is limited to 100, so is the hospital indemnity. But you may surprise yourself that this will come up. It may come up initially if you're a Medicare agent, just talking about hospital indemnity in general, filling the gap, and you might back into the actual rest of the OmniFlex because you were having the question posed to you about hospital indemnity. So even though it's a rider, it may be one of the ways that you're starting the conversation with that client, and then you're backing into completing the rest of their healthcare plan with the an extended care solution. And here's the map. As I mentioned a little earlier, we started with 13 states. We're now Oregon just came aboard. It was just live as of the other day when we were with Manhattan in the home office, we said, "Hey, isn't it supposed to be coming on?" And they said, "Oh, let's check." And it actually had just gone live that day. And then Rhode Island, which you can see to the far right, has been approved, but is not live. That should be live probably this weekend or at the latest next weekend. And that will bring us to 34 states. And Tom is working very closely with the team at Manhattan to go back in and to refile in some of the states that we took a run at initially, Kentucky, Pennsylvania. Some states we know we're not going to have any chance, and that's New York, California, Washington, Florida. But Utah and PA and Kentucky and Virginia are ones, and Delaware are ones that come to mind, are additional states that we're trying to adjust the plan design as to what will satisfy that particular state. But when it's all said and done, we'll probably be just shy of 40 states which is very robust for a short-term care plan, because some of the other folks in this particular space maybe are just sitting around 30 or 32, 33 states. So it's a great opportunity. But Tom, back to the paper app, which is an easy versus going through the e-app. It's easy for you to kind of pull up and navigate and show some of the underwriting aspects as far as the questions. And so I'll turn it back to you to address that.
You bet. Again, most of you will be using the e-app, and we have full training on the site and that we do on these webinars for how to use the e-app and everything to make it easy. Most of you will be using that. But one of the things we talk about a lot, even on the e-app, I steer you back here when I do training on the e-app, and I say, these policies, unlike long-term care, again, if you have that long-term care hat on, those can be literally 5, 6, 7, 8 pages of underwriting questions, right? Where they're sometimes really detailed for traditional long-term care. Where with these policies, you can see here, it's all on one page, not even a full page. And this is for a very, very comprehensive, robust short-term care plan, right? So you're going to be able to understand and learn this stuff really quickly. The first couple apps you write, whether it's on an e-app or looking at a paper app, it's real easy to understand how you can get people and talk to them just conversationally to see if they qualify for coverage. So I'm not going to get too deep in this, and I'm certainly not going to read all this to you. But if you look at the paper app, this is something that I recommend you have open if you're doing sales at your office and doing it remotely. And even if you're talking in front of somebody, to have it open or a hard copy of it, because this is where you can say, nowadays you buy these plans as much with your health as you do with your checkbook. Have you been to the hospital or been to see a doctor in the last 5 years? Do you have any major conditions we can chat about? Because I need to make sure I suggest a good plan for you. And you can see here, this top area on the app is knockout questions. If you answer yes to these, we can't offer coverage for mom or dad. You can see both of them are on the same app. You don't even have to be filling this out if you're not doing a paper app, but this is just to show you conversationally. Hey, do you have AIDS or HIV? Did either of you have that I didn't know about? Okay, and then are you disabled? Or are you on Medicare prior to age 65 for disability? Okay. And again, look at how broad these are. Here's your activities of daily living in the middle here. You can't probably read all this on your screen, and I'm not going to read it all to you, but you can see these are real broad conditions. Parkinson's stage 4 or 5, not even Parkinson's stage 1 through 3. So you can see those are big time knockout questions that we're throwing the net super wide with the OmniFlex plan. And I think you'll be really pleasantly surprised. Same thing down here. Are you receiving treatment for diabetic complications, not just diabetes, but complications like neuropathy, kidney disease, etc.? Are you receiving treatment because you're insulin dependent with congestive or heart failure? See, so it's things that are really pretty deep. And then, of course, they have one to protect the carrier here. Do you have a surgery plan or treatment plan in the next 12 months? And then there's a cancer knockout. So that's really, besides the cancer one, you're going to see almost everybody you're going to get through is going to certainly have an okay time getting through at least a limited plan. Then when you go down further, this is that knockout where we talk about it's not a knockout. It just tells us if you answer yes to any of these questions down here, these little 5 points, then you can only offer $100 maximum per day for the home care, the facility, and the hospital indemnity. And you can't put inflation on there, okay? So most of the people, again, I can't stress enough, when you get into our underwriting webinars, we talk about the fact that OmniFlex throws the net super wide, and it's very liberal compared to some of the other options out there. Because look at these conditions. Even these, I won't read them all to you, but pretty major conditions. How many people do you know that had an amputation caused by a disease, for example? Same thing with strokes. A lot of people have had strokes, but not very many that you're going to be talking to, right? Same thing with diabetics, 50 units of insulin. Some people have it. That's probably one of the most common ones that you'll see as far as a limiting factor out here. Then it gets down to, again, big conditions. MS. Most carriers run for the hills if you have MS. This one says, hey, if you have MS, we're not going to be able to get you a full-blown plan, but we can still get you a $100 per day plan. So that's the beauty of this policy. Down here, you can see some of the lung issues, COPD, etc. So really strong opportunities for you to throw the net wide. And all of these questions are identical right on the e-app. So a lot of you will just use the e-app. But I wanted to make sure I showed you that before we went too deep into it. And again, since I'm over here in my PDF viewer, you can see the brochure. Again, I'm just going to try to roll quickly. This shows a lot of those same things you saw in the training today. There's that graph, all these cost things, the same layout here showing you how easy it is. So really easy to show people what we have. And we do have a comparison sheet on there that'll show you side by side. Here's maybe the underwriting leniency I wanted to show you because we are doing OmniFlex training today. Check out, this is the Recovery Cash and Recovery Care. These are full-blown short-term care plans out there as well. These might say, hey, out of all the 45 different types of conditions you'd have in our InstaPivot tool, which we're not going to get into today, But basically, the higher the number is here, the more lenient it is. And you can see there, 33 out of 45 rows would be available for limited plan coverage. 20 out of 45 compared to 8 or 10 would be available for full benefits. So that's one of the things we're excited about OmniFlex, is that one of the biggest abilities of these plans is what? The ability to go out and have the availability. And that's partly to do with underwriting. So I don't think we need to go too deep into any of these other ones because we're covering things we already covered, Dennis. Anything else you want to add in here? And we'll head out and show you the site like we always do. But otherwise, anything you think we need to add?
Yeah, Tom, I was just going to say that, for those who have sold long-term care, remember how streamlined this process is. Take those questions literally. Don't try to interpret them. If you're a long-term care agent and you like to try to give underwriters more information, just read the questions and have the client answer appropriately. And also keep in mind that they're just going to run a pharmacy check, so that when you are completing that e-application, make sure that you, even if you don't know the date, we get into this more specific time when we do that training, but even if you don't know the date of when they started taking the medication, you can estimate that. But the important thing is, don't leave off the medications, because when they run that pharmacy check, they're going to say, gee, you didn't disclose, these 10 medications. So make sure you err on the side of at least doing that, realizing that typically there's not a phone interview unless there's something that they see on that pharmacy check, and they certainly don't want to ask for medical records. We've had very, very limited cases where both a phone clarification call was required, as well as asking for the medical records. They want to really streamline this to turn this around in 2 to 4 days. And that's why this underwriting isn't that 55-page application like a long-term care. It's so streamlined. But Tom's going to take us to the site where you can get all the additional information on the OmniFlex, as well as any of the other products, and give you some helpful tips again about where to find some of the other recordings as well.
You bet. Thanks, Dennis. The site that you want to have is the integritystc.com, and your marketer got you on the webinar will get you there. I'm going to go over to the sales here in a second, and we're almost done, so we're not going to hold you much longer. But here's all of our different plans that we have in the Integrity Short-Term Care Initiative, and we have training on all these different plans, as you know. Today we're doing OmniFlex, so if I click on OmniFlex, for example, you're going to see the state availability, and it's always updated. This is a living, breathing site. A quick little introduction video of OmniFlex for you. And then down below that, in all the carriers, we have this really bird's eye view of what it offers. We have different things that you might need for agent use, for presentations and some differentiators, etc. There's the corporate brochure if you happen to need that. Then remember, Dennis said we have some things about fast facts. We have a whole library in here that'll show you the power of restoration, the power of two-tiered underwriting, the power of the Fast 50, all these different things. And here's that ramp up power we talked about. If you ever feel like, boy, I don't know for sure how to explain that to the client, you can go on here and listen to this relatively short webinar. It's not long like these full-blown webinars. These are short little side webinars that show you just some of the highlights of these products, okay? Same thing when you get into the consumer brochure, consumer videos, all that information is here. Quoting, this will show you that you can get a link to their site over there, so you can do your enrollment login and do sites, and we have training on this as well. And then all the different things you might need, including our InstaPivot tool, is available in several areas on this website, so you can have access to that as well. So these are all things that you might need as far as products. But if you go over to that sales and marketing area, again, I just wanted to show you where all the webinars are so you know they're there. Some good stats on short-term care. And if you go down to the extended care fast facts videos, here's some of Dennis's fireside chats. Dennis has years of experience, and he's trained literally probably 100,000 agents nowadays on how to go out and be successful in the field. Some great videos down there. And if you go into here, you can see a full webinar showcase. I'll click it really quick before we let you go. And we can't stress enough, if you miss any of our live webinars, or if you have an agent who you want to steer to it, or whatever the case may be, all the webinars we've done are on this site. So you can see there's a Medicaid spend down, can clients self-insure, super sticky solutions, all the way down. I'm not going to read all these to you because I got 5 pages of them, about 52 of them or 53 of them on there now, that you can go in there and listen to the full-blown webinar if you'd like. So basically, in a nutshell, I've said it so many times, it's getting old. We don't throw you out of that plane without a parachute. Everything you need to be successful for short-term care to help people is basically on this site. Okay, Dennis, anything to add to that, or we'll just
No,
wrap
Tom,
her up?
I think that's great. And I think that, the key is, and I'll let you wrap it up, Tom, but from my vantage point is, make sure you look at some of those other conceptual and consultative approaches that we're sharing with you on how to start the conversation, because, products are great and OmniFlex certainly is a standout. I mean, it's really ahead of its time as it relates to the innovation that, and the flexibility of this design. But at the end of the day, you still have to be the one that starts that conversation. And so it's important to learn the products, but it's also important to make sure that you know how to actually ask the right questions. And so that's why we have such great content here for you to go and review at your leisure.
You bet. And again, we can't stress enough, if you go to some of our earlier webinars, when we talk about the need for this and the gray hair in America and how we're underfunded, when it comes to the end of the day, these long extended care situations are the number one unfunded, unplanned liability exposure Americans have left, really. And it's one of those things you'll see in our sales webinars. But you guys know this isn't a hobby. Where these plans pay really nice commissions. They pay really strong renewal commissions as well. So you're going to make some good money and help yourself out as you're helping other people. And not only that, if you're selling final expense, or more importantly, those Medicare products that you guys know next year, somebody's going to come scratching at their door trying to replace what you put in place for your clients. Anytime you have multi-products in the same household, we all know the stats don't lie. The persistency goes way up, and you keep those other products on the books as well. So there's lots of good things you can do by offering these other peripheral products, and you can be a more trusted advisor on other parts besides what you're usually selling to your clients as well. So not only do you not have to search so hard to find people to talk to, but tell you what, you've got a built-in client base and a built-in referral base that I think will pleasantly surprise you as you start bringing up these other opportunities for them. So that being said, Dennis, thanks as always for your great expertise today. And for those of you on the call, have a fantastic weekend, and hopefully we'll see you on another webinar soon. But take the next step. Contact the marketer who got you on here, and make sure you go ahead and get appointed either right on our site, and there's a little button up in the upper right, or contact your marketer and get appointed with all these carriers so you can go out and help more people. All right. Thanks, everybody. Have a great weekend.
Thanks, everyone.
The next step is yours. Contact your marketer for more information and to start offering short-term care solutions to your clients. And be sure to sign up for our other short-term care hot topic webinars.